You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. You know what's popping off in the futures market? Spoiler alert, a little bit of red. We'll get to all that fun in a second. Unless you're talking vol, then things are looking spicy. But the whole show is going to be spicy. I'm looking forward to it. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you at the top of the show, if you want to join us for the awesome Pro Q&As. You like spicy vol? We got deep into vol on the Pro Q&A earlier this week with Mr. Scott Nations. If you want to come back after vol views to play some fun games over there and options oddities, talk some unusual activity, man, trades already being closed from last week's show just on Monday, just weekend trades. That's how wild it was. Of course, you want to get your name in the hat to win the Pro Trading Crate, just like our member Joe Lewis did this week. Congratulations to you. Only one place to go, theoptionsinsider.com/pro. Place to go to learn more as we learn who's joining us for this fun-filled extravaganza here on TWIFO this week. I'm pleased to welcome back in the old CME hot seat. It's been a while, but our good buddy, Mr. Uncle Mike Tossaw from St. Charles Wealth Management. Uncle Mike, welcome back to TWIFO, sir. It has been too long.
It has. It's always a pleasure to be here. I get in touch with my inner Mel Allen on This Week in Futures Options.
Your ears must have been burning the last few weeks because you have been invoked a few times on the show, sir. So I think it's only appropriate to give you a chance to respond and rebut your naysayers. But before we get there, sir, Uncle Mike, let's dive into a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down what's lighting it up to the light side and to the dark side, aka the upside and the downside over there at CME. Since we closed the show last week, and listeners, we also tweet out this report in a nice graphical format. So if you'd like to see things visually, you can do so over there. If you follow us at Options, we tweeted out right before Showtime. Give you access to an additional fun premium report that you otherwise have to pay for because we like you folks out there. And looking right now, I was joking about red, but actually the broad spectrum of products over there at CME were not quite 50-50. I would say 60-40 red over green. So there is some green to be found. And in fact, our largest percentage movers, we actually have what looks like pretty close to a tie out there, which is almost exactly a tie. That's kind of eerie out there. So maybe a little bit more egalitarian show than maybe the headlines and what you're seeing when you're dialing up, a CNBC or looking at some of your other outlets might lead you to believe. All right, Uncle Mike, I know we've had some trouble in the past. It's been a challenge for you to lead the folks through the movers and shakers. Do you think you could handle it this week, sir, or am I asking too much?
I am a moving and shaking expert. Not only do I move, but I also shake. And when I shake, I also move.
Well, all right. As you can see, we've added a few extra to the light side this week to encompass some of your beloved precious metals, sir. But that said, take it in whichever direction you want, sir. The floor is yours. The mic is yours.
Well, let's start with the dark side. We got coming in at number 5, Kansas City wheat down 5.78% this week. Was also number 5 on the dark side last week at 5.84% to the downside. So Kansas City wheat is not doing well. We got WTI down 6.25%. We got Brent down 6.69%. So the slippery stuff is definitely sliding. We have heating oil down 7.49%, and this is a futures contract I'd have never quoted in my entire life, so today's an exciting day for me. Class 3 milk is down 9.2% on the week. Mark, I did not wake up this morning and think I'm going to be on TWIFO and talk about Class 3 milk. We got to talk about that a little bit. There's got to be something going on with that.
I am lactose intolerant, so I am legally prohibited from getting quotes on Class 3 milk. So I'm glad you were here to represent it for our listeners who can enjoy a bit of dairy. And I guess, they're enjoying it more today because it's cheaper. When they go to the store, Uncle Mike, that gallon of milk going to be a little bit cheaper today, sir.
Now we just need to get the same thing going with eggs.
Yeah, unfortunately, egg futures, if we had some listed, would be quite the pricey commodity, sir.
No doubt about that. Well, let's go on the light side then. Let's talk about some precious metals, because I noticed that normally we don't go up to number 7 and 14, but we have that on the list today. Gold. There's gold in Demdare Hills. It was number 15 on the dark side last week, down 2.29%. Getting a little bit of that back this week, up 1.2%. Coming in at number 14 on the light side. We have silver, up 3.77%. Coming in at the number 7 spot on the light side. We are actually down 5.18% last week, so it was on the dark side. It went from dark to light, from darkness to light. Gotta love it when things like that happen. We got the euro coming in at number 6, up 3.8% on the week. Copper coming in at number 5 at 4.72% on the week. We then have oats up 4.93% on the week. And then we got our Bob. Who is this Bob guy and why does he have gas? That's what I've been asking for my entire career. Up 5.01% on the week, coming in at number 3. Then we have, I just have a hard time saying it. It's a hard time pronouncing it. Bitcoin coming in at 6.33% to the gain on the week. Back to the light side, it was number 1 on the dark side last week, down 13.95%. And then finally, number 1 on the light side for the week, we have natural gas coming in at a 9.18% gain on the week. Holy cow, we got some desire for the natural gas. And those are the movers and shakers with both movement and shaking all at the same time.
Look at you, sir, redeeming yourself. It's like you were born to do. We have to have on the show every week, sir. You can do the movers and shakers for me. How's that sound?
That's what I do. I am a mover and a shaker.
All right. I will now spell you, sir, as I break down a little bit of vol action out there. I could summarize the entire CVol report for you this week as vol is up Vol's up across the board. There you go. Done. C-Vol broken down for the week. No, of course, there's a little bit more to it than that, listeners. Head on over to CME and C-Vol. Just type it into any browser you're rocking. That will get you to the C-Vol dashboard. Set the high-low range to 1 week. That's, of course, if you're listening relatively soon around today's show. If you're listening after the fact, you may have to adjust that a little bit, depending on when you're listening to the show. And then, of course, go to a nice grouped list. And, of course, make sure you're choosing the aggregates tab as well. The aggregates tab, an important one as we kick things off in the aggregate energy C-Vol. 56, pretty much even to start our list out here today, listeners. Up over 2 points, about 2.2 points just today. Hanging out at the upper band for the week. In fact, just about everything we're going to talk about this week is either pinning the needle to the upside for the week or slightly below it. But Vol's up across the board, listeners. The low was 46.38. Below it, we have the commodities aggregate C-Vol, 36.60 right now, up about 0.87 today. Hanging out also at the upper band for the week. The low, 31.44. Below that, we have the FX aggregate C-Vol, whopping 10.39. Now, it may not sound like a lot, but in the realm of FX C-Vol, that's actually pretty juicy. Gaining 0.75 of a point just today. So FX, dare I say it, looking spicy. Also pinning the needle for the week, the low 8.79. So that's quite the range out there, listeners. 1.6 points on the week for FX. You don't see that too often. So FX looking spicy. Below that, we have the metals aggregate C-Vol, aka Uncle Mike's favorite thing. Coming in a little bit today, 18.21, off about 0.16 today. The high for the week, 18.37, so it hit its high, obviously, yesterday. The low, 17.73. Below that, we have the Treasury price vol at a whopping 7.13, giving up 0.25 of a point today. The range on the week, 7.38 to the upside and 6.77 to the downside. So hanging out slightly off of its high that it obviously hit yesterday as well. Below it, we have the aggregate AGS C-Vol, 21.76 right now, off 1.12 points just today. And on the week, it's had a range of 19.12 to the downside and 22.87 to the upside. So another one that pretty much hit its high yesterday. And then, of course, bringing up the rare on our list all the way down at the bottom, the Treasury Yield Vol, 125.62, off almost 3.75 points today. The range for the week, 118 even to the downside, 129.34 to the upside. My goodness, 11.34 point range on the week. That's pretty wide. But then again, it is Treasury Yield Vol. That gets pretty spicy pretty quick. So again, pretty much across the board, C-Vol pinning the needle to the upside this week. But you know what, listeners? I mentioned at the top of the show that Uncle Mike's ears have been burning because he has been evoked quite a few times on the show in the last couple of weeks. Only fair to give him a chance to defend himself as we kick things off in the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, you know where to go to kick off our journey in the metals. Listeners, go to cmegroup.com/TWIFO, TWIFO. Once you're there, go into that asset class list. You're going to go all the way down to the bottom of the list to metals. And then, of course, you're going to go in product family, down 1 to precious. In this case, we're going to tick down 2 to silver. Uncle Mike's beloved silver coming in at number 7 on our movers and shakers report this week. Up nearly 4%, 3.77% this week. Of course, if you go back to last week's show, it was off 5.18%. So it's been a topsy-turvy couple of weeks. In silver, 33.16 right now, up about 1.6 points just as Monday, so up about 5.3% just since Monday. Obviously up a little bit less than that if you go back to the end of our show last week. Putting up a little bit better numbers this week than last week. Last week kind of sleepy, only like 30-odd thousand contracts on the tape. This week a little bit more respectable, 45,000, but still not going to threaten nat gas, let alone your E-mini or your 3-month SOFR out there from a volume perspective, or the 10-year note, listeners. But a banger time. But Uncle Mike, the reason we're kicking things off in the metals, on top of the fact that silver's moving again, this week is that it's been the subject of much debate on the program. First off, it really kicked off 2 weeks ago when Carly Garner from DeCarly Trading was on the show. She came on and she just started talking smack about your beloved silver out there, Uncle Mike. I believe her exact quote was, "Silver is where hopes and dreams go to die." And I thought that was pretty dire. Some of our listeners in the pro chat, they said we need to have a debate between you and Carly about silver. But then lo and behold, Uncle Mike, the piling on continued on the program last week. We had Brett Friedman from Winhall Risk Analytics on the show, and he piled on out of the blue, kicking silver while it was down, saying silver is where good trades go to die. So Uncle Mike, a twofer of folks piling in on silver, saying it's a place where good trades and hopes and dreams go to die. Our chat wanted him to debate you as well. I thought it would be unfair at that point to have 2-on-1 against Uncle Mike. But nonetheless, I am giving you your chance now, Uncle Mike, to rebut from all these people who say your beloved silver is the place where all good things go to die.
Well, that's quite the act to follow. So I guess if you're right, then you don't necessarily have to. It doesn't matter how many people there are per se, I guess. But just in looking at this, silver's right around the same levels it was 2 weeks ago. It went down, but then it came back up. So, I mean, I don't know if I need to debate this, at least for now. It really hasn't gone to die. It's kind of where it was. So I don't know if I would agree with their sentiments on this. So I think silver is one of those things to where you need to have patience with it. And silver at some stage, it's going to come like a thief in the night to where we're going to be in the high 40s. And that's going to be the opportunity to sell it. It doesn't go up linearly or in a linear fashion to where it just goes up a little bit every now and then. It's a type of metal or it's a type of trade that it's going to bore you to death. And then all of a sudden one day it's at crazy levels and the exchanges like to then up their margin requirements on it. And then it might go down. So I don't know if I would necessarily say it's a place where hopes and dreams go to die. I mean, that's if you play for the Chicago White Sox, I thought. But, I shouldn't have said that, kicking them while they're down. But I think that silver is just one of those things to where it's different than other trading instruments, and you just got to be patient.
I think Carly also mentioned, too, that she's really thought over the last couple of decades, there's only really been one or two good trading opportunities in silver in all that time. So, yeah, not a lot of love for silver, Uncle Mike, kind of coming out of nowhere. I was a little bit surprised. So, I don't know. Uncle Mike, you've been the man. You've been defending it for ages. You love your 2-year silver collars. You have them on willy-nilly all the time. So, yeah, kind of surprised me to have such a piling on, a kicking of silver while it was down. So that said, it's making some back today or this week, really. So I guess not entirely the place where hopes and dreams go to die, Uncle Mike. But interesting stuff. Let's see what's piling in out there, listeners. Do options traders agree with Carly and with Brett that it is the place that hopes and dreams go to die and indeed good trades? Like we said, not the most robust of the metals, 45,000 contracts on the tape right now. Of that, about 43% going up in the April contract, has about 20 days to go. What is the vol in April silver, you might be asking? It's decently frothy for a metal. 28 1/3, up about 1 1/4 points. That's one of the things that separates silver out from, let's say, its big brother gold. It's kind of like a small cap versus the S&P. Going to be a little bit spicier, going to be a little bit more volatile, which could attract you if you're into a little bit of the old premium harvesting out here, listeners. And in terms of skew, we traditionally look at the precious metals and say, okay, upside is where the action is. It's a question of how much are the calls bid and how much are the puts offered. And the answer to both is not a ton, really, which is also kind of interesting. In fact, in the narrower portion of the term structure, all the way before the April expiration in about 20 days, the calls aren't really that bid at all. Only about 2, maybe 2.5% bid, which, again, not that exciting. If you go all the way out to April, 2.7% bid. That's actually coming in from 3.3% last week. The puts, 3.2% cheap, actually getting cheaper than they were this time a week ago at 1.7% bid. So not quite the extreme bid we've come to expect in the precious metals in either direction, really. Or I should say the extreme discount when it comes to the puts. But interesting nonetheless. If you go a little bit farther out on the term structure, we go out to August, September, November, December, that time frame out there. Then we start to see a little bit more juice popping into the upside. The August contracts are about 10% bid to the at the money right now. If we go out to November and December, we have almost 12% and 11% bids, respectively, out there. So interesting stuff out there when it comes to the skew out here in silver. Perhaps not as frothy, not as juicy in the near-dated contracts as maybe you would expect, Uncle Mike. And maybe some of that also leaning into what we're seeing out here this week. The big dog this week are the April 35s going up about 2,000 times exactly. It seems like it's been back and forth trading throughout the week, Uncle Mike, which also maybe accounts for why that call skew is coming in a little bit. We saw about 660 on Monday, mostly opening, 680 on Wednesday, also opening, 380 on Tuesday closing, and 328 today against an OI of about 1,800. So folks could be bailing on those again today. So Uncle Mike, we're at about a 33.16 in that April future. These calls have about 20 days to go. April 35s, do these float your boat at all, sir?
Don't know if I want to feel quite that aggressive with it. So that would be a little bit too aggressive for my taste. Even if I was totally speculating, I would probably want to go out further than April.
Don't have a price on these. Let me look if I can see really quick. Sometimes it's challenging, listeners. I want to go to the options. I want precious metals only. All right, it won't let me for whatever reason. I need to filter by silver as well, listeners. So I'm getting all the prints out here. But let's see if I can go straight to the silvers. I got 35 halves in April going up for 22 cents. Interesting. What are the 35s going for then? Let's see if I can. 35 halves for 22 cents. So obviously figure a little bit more for the 35s, even 25 cents, maybe 30 cents. So I don't know. Does that make a little bit more of an impact in your decision, listeners? That premium level out there. Like I said, we already talked about the vol level out there. Let's look really quickly to see if we see any other interesting and or aberrant prints. It looks like the 35s are kind of the trade of the week out here, Uncle Mike, because we also see them going up out here in May about 1,600 times. That contract has about 49 days to go. Let's see the vol out there, 28 3/4. So slightly spicier, almost half a point spicier than the April contract. Looks like these 35s here in May, again, going up 1,600 times. The lion's share on Wednesday, 990, so almost 1,000 going up of that 1,600 and a couple hundred each the rest of the week. So Uncle Mike, a little bit more time here. You're going out about almost 50 days at this point. Do you like those a little bit better, the May 35, sir?
I would consider that, yeah. Like I said, silver's just more of, yeah. No, I would definitely consider that one.
What about you, listeners? You like that a little bit more time frame to work with out there? Obviously, duration is going to be your friend. You're going to pay for it if you're buying those. But on the flip side, you're getting a little bit more time to work out here. Again, you need a roughly 2-handle move to make these things start kicking into high gear. If you like something a little bit closer to the fire, how about the May 33s going up about 1,200 times this week? Pretty much evenly throughout the week, almost every day. So 1,200 of those going up this week, 33s. Obviously, those are slightly in the money calls at that point. So going to be a wee bit more expensive, but also got a little bit of meat on the bone there as well, a little bit of intrinsic value. So I guess it's a question of which approach you prefer. I'm looking here. It doesn't seem like they line up as any sort of vertical, really. So it seems like it is mostly unrelated paper here, but interesting nonetheless. Upside trading here in silver, listeners. So Uncle Mike, he says pshaw to those folks who say silver is where good trades go to die. Now, Uncle Mike, I know you've been also one to dabble in the king of the shiny stuff, aka gold. And, people have been looking at gold for a while now as well. Gold, of course, if we had to parse it this week, listeners, coming in at number 14 on our movers and shakers, up about 1.25% since our show last week. Hanging out at a 29.22 as we're kicking off the show. Up nearly 75 handles this week, 2.6%. Not surprising, really, that, we're seeing a bit of a sell-off in the broad market. So folks get spooked. They head into gold. That's not surprising that we're seeing gold get a bit of a lift out here this week. But on the show a couple of weeks ago when Carly came on, she was just slamming all the precious metals, Uncle Mike, including gold, which some people are saying, okay, are we going to hit that magical 3,000 level, set some new all-time highs? She came in on the show and said, gold is nothing but an accident waiting to happen, Uncle Mike. What are your thoughts?
Well, she definitely disagrees with the old saying, the trend is your friend, unless the trend is your friend till the end. And apparently she believes it's the end because just looking at gold, we're probably up, since November of 2022. If we do hit that 3,000 mark, we will have pretty much doubled in gold over the course of less than 3 years. So you can't really argue with something that's going straight up like that. Believe me, I try to with Bitcoin all the time, but when you get the type of movement that we're getting in gold, it's up quite a bit, and it looks like it's continuing to go up quite a bit. We had a little bit of a pullback recently, but we're knocking on the door of all-time highs again in the shiny stuff.
Yeah, we're seeing some interesting options activity out here. Listen, I'm trying to see if I could pull up some prices for you. There we go. Okay, so interesting stuff out here, listeners. Let's see what's lighting it up out here in the old big dog, which is gold. Is it a banger week? Usually we expect 230, 250,000 contracts on the tape in gold. I'm not seeing that this week, which is kind of interesting, especially given the fact that gold is actually moving this week. 183,000 contracts only on the tape in gold, so not the most explosive week from a gold volume perspective. Of that, about a little over a third, 34% of the paper going up. In the April contract, again, has about 20 days to go. That future 29.22, like we said. What is gold vol right now? 1585, actually off slightly, about a tenth of a point though. So kind of a bit of a rounding error. Gold vol, most of the term structure is mostly up. In terms of skew, now this is interesting. The question is always, to what degree are the calls bid and to what degree are the puts offered? And both the puts and the calls are what I would pretty much term flat right here, which is kind of wild. We don't see that too often in the precious metals, let alone the king of the precious, aka gold. The calls right now are actually literally 0.0. They are flat. So the call wing in April gold is flat. You can go out 25 deltas and that call wing is flat. The exact same vol as the at the money, which is hanging out right now at a 1585. That is wild. I can't remember the last time I saw anything like that. And that's only down from about a 0.5% bid last week. So as we were kind of saying on the show last week, even though we got a nice move this week, the options have kind of been pricing in like maybe we're getting a little top heavy here. But then you say that, you would expect, okay, here comes the bid for the puts then. And that's not really materializing either. They're about 1% bid. They are unchanged from what they were last week. Anything within a point really of the at the money, I kind of consider flat. So it's not like we're seeing a market bid for the put wing either, in which case it makes you kind of wonder, what are we looking at here in the options? Looks like the options are really pricing in kind of a coin flip right now. We're at this kind of equilibrium point. We're not showing any real bias or concern in one direction or the other. So we could hang out here, or we could explode in either direction. The gold market, the gold options in particular, are not really telling us anything, which is kind of interesting. Now, if we expand our purview a little bit and we go out, let's say, to the end of the year, which is where the gold bugs typically like to hang out, the longer term contracts, then we see bids piling into the skew again. We go out to December, 8.2% bid are the calls, 3.7% discounted are the puts. So that makes a little bit more sense to me from what I'm used to seeing here in the precious metals, but a flat skew in the calls in gold, I don't know. It's kind of weird. Uncle Mike, you've been known to trade a little bit of gold in your day. Does it give you the heebie-jeebies that the call wing is absolutely flat in gold right now, sir?
I don't know if I would say the heebie-jeebies, but it's definitely a surprise that that wing is flattened out. Usually the precious metals are a spot to where you can count on an unflat wing, if you will. So definitely something to think about.
Speaking of thinking about things, the big trade we were talking about on the show last week, listeners, in gold were the 2,800 puts in April. They were trading for $16.60. Paper was buying those. Some of them, they were legging into a vertical, so they were selling another contract below. I have to go find the exact one. But once again, Mr. Uncle Mike, the April 2800 puts are leading the dance again this week. Although this time it seems like maybe some folks are getting the heck out of Dodge. We have about 5,200 of those trading this week, including about 1,400 each on Monday and Tuesday, with paper bailing, getting the hell out of Dodge. About 1,700 today against an OI of 4,300 and about 700 on Wednesday. Looking at the prices here, listeners, it looks like they are bailing on them for prices around, they're selling them for about $8.20. So those puts have been pretty much cut in half since the show last week. So if you were saying you liked those puts or those put spreads, a bit of an ouchie this week, pretty much 50% haircut. Uncle Mike, 2,800 puts were lighting up our tape last week in gold. This week, seems like folks are scrambling to get the hell out of Dodge, sir. What are your thoughts on those bad boys?
Yeah, the crowded trades, when you want to get out of them, it's a crowded door a large amount of people trying to squeeze through one door. And when that happens, it typically doesn't end well. And that's kind of what's sounding like it's happening right now.
A lot of people fleeing the puts in gold right now, listeners. We also talked about farther out June 2,700. I think it was a vertical, a 2,700, 26.5 put spread in June last week. Well, that's going up 5,000 times this week, traded 5,000 times on Monday. And guess what? Paper bailing on that as well, listeners. So folks getting the hell out of Dodge on the 2,700, 26.5, a 50-point put spread in June as well. So I guess the tail of the tape for right now, at least in gold, despite the fact that the put wing not really budging much this week, is showing us that folks are getting the heck out of Dodge on the downside, at least in some of the existing positions that they may have overpaid for in gold last week. We could talk precious and just metals in general the rest of the show, but Uncle Mike, I think we probably got to talk about one of your other favorites out here on the old docket this week, because it is certainly getting a lot of attention from the folks right now. It is the equities. Let's head out there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, pop out of that metals and the asset class. You're going to go up about 4 slots from the top to equity indexes. Then where we start from there could be the NASDAQ, could be the S&P. I'll let Uncle Mike, could be the Russell. I'll let him lead that dance. But it's no secret. It's been a wild, a topsy-turvy, a tumultuous period in the equity indexes, even since our last show last week, listeners. Tariffs really just gut punches, successive gut punches to the market. Seems like session after session after session. The market gets killed, vol pops. Then intraday, the bulls come in to try to bid it up. Happened again yesterday. Maybe we saw a bit of a détente looming on the horizon for the trade war, then right back down today as it seems like that détente not materializing anytime soon. S&P off about 2% right now as we're coming into the show, listeners. NASDAQ off over 2.5%, 2.6%. The Dow off about 1.25%. Uncle Mike, I saw this headline right as we were kicking off the show. I think this was on Market Watch. It kind of struck me as, I'm not going to say hyperbolic, but a little bit, shall we say, drastic. This headline and this article on Market Watch said, right now, the NASDAQ is facing a sum of all fears type sell-off. I don't know if I would go quite that far, quoting the old Tom Clancy, nuclear explosion threat type level. But I don't know, listeners, is this a sum of all fears type sell-off to you? Looking at the numbers right now, the NASDAQ is off nearly 5% just for the year, 4.6%. So obviously not great for the NASDAQ bulls. S&P off about 2.5% year to date right now. And the Dow off about 1.25%. S&P for a little bit starting the show was threatening to break that 5,700 level. Let's see, how low did we get? Got to about 5,713 or so. So Uncle Mike was sweating out there. So Uncle Mike, let's start there. Is this a sum of all fears type sell-off, and what's catching your eye in the world of equities right now, sir?
Well, I think right now, like you had said, it's about tariffs. And we talked a little bit about it on the option block today, in that Trump 1.0 in his first term would say, oh, we're going to have a lot of tariffs, and the market would pull back. And then Trump doesn't like it when the market pulls back on his watch. So shortly thereafter, he would say, you know what, we're probably not going to have that many tariffs, and the market would increase. And it was kind of like a built-in buying opportunity whenever we would hear about tariffs back then. What's interesting right now is that with tariffs, we are using them actively. They're being put in. And Trump hasn't wavered on this. In his speech the other night in front of the joint session of Congress, he said you might experience a little bit of pain as we're trying to get all these tariffs in place. And that's something that he typically doesn't say. So it makes you wonder, are we in the tariffs for the long haul this time? Is it for real this time? Or is he going to waver and back down on them in the near future? And I think that's to me, that's the question that I want to have answered with regard to what could happen in the equity market. Because obviously, if we put in a very high tariff system, it's probably not going to bode well for U.S. stocks. But maybe if we put in very minor tariffs or something along those lines, it might not be so bad. So not to steal too much thunder from the end of the show of what we're watching in the future, but that's kind of where I'm at right now with equities, of what I want to see and what can actually happen with it.
All right, listeners, let's get out there. Since it is in a quote-unquote sum of all fears sell-off, let's see what's popping off in the NASDAQ this week, shall we? And looking pretty spicy from a volume perspective, so they may have a point there. Volume-wise, usually we see, 100, 150,000 contracts maybe in the NASDAQ if things are looking spicy. Maybe 200 if things are getting pretty hot. 250, 250,000 contracts on the tape right now in the NASDAQ 100 out here. So that in and of itself, again, that's not sum of all fears level, but it's decently active, all things considered. We're at a 2180 in that future as we kicked off this segment, off a whopping 738 handles, or about 3.5% just since Monday. That does lead a little bit of credence to the sum of all fears type sell-off. Bad run since Monday. Of course, you go back to the end of our show last week. A little bit of a different story. One of the things I like a lot of things about the NASDAQ, obviously. One of the things I do like, though, is that it's not just all 0 day all the time. We ran the numbers on the option block earlier, listeners. SPX, SPY, you name it. All the major index options are all top 20 for 20, all expiring today in terms of the most active contracts. But with the NASDAQ, get a little bit of wiggle room, which is kind of interesting out here, including right now of that 250,000 contracts. Well, the lion's share of the paper, still 31%, is going to expire in a few minutes. So there is still, don't get me wrong, there is still a lot of 0 day going up. But the largest individual print is actually going a little bit farther out. It's going out to March, which is about 15 days to go, a little over 2 weeks, expiring on the 21st. These are the March 21,500 calls, trading quite a bit this week, about 3,300 times, including a big block of 2,600 all opening on Tuesday. So folks piling into the 21,500 calls right now, which again, that's, I'll have to look at prices. The paper was buying those bad boys. That could be a bit of an ouchie. You got time. You got 14 days. But NASDAQ needs to get its butt in gear if you want these bad boys to start paying off. If you're overwriting, hopefully you got a good bit of juice for them. Of course, they haven't come back to close or do anything with it yet, so that kind of leans against the overwriting argument here. Worth noting also the 21,000s traded 1,100 times, also opening on Tuesday, so it could be a bit of a funky ratio, but it seems like that was just a hot day in NASDAQ March upside, listeners. And if we go a little bit farther out, let's go out to April, a whopping 55 days. I know, an eternity in the modern equity options landscape, listeners. We've got about 2,300 of the 20,500, say that 5 times fast, calls going up again. And all that actually today. So all that today, nothing traded the rest of the week except for a 7 lot. So 2,281 of these going up today. Obviously, that's opening. Nothing else going up today, so somebody really liking themselves the 20,500 calls in April. 55 days to go here, listeners, in the NASDAQ. You like those? Are you down for those? I can't pull up a price just yet, but would you be a buyer or perhaps a seller of those bad boys? All right, let's look really quickly. I am intrigued, listeners. It takes a couple of seconds usually to dig up the blocks. As I'm doing that, Uncle Mike, are you a big NASDAQ guy? What about some of these levels, like 20,500 calls, or let's say the more optimistic 21,500, only 14 days to go, Uncle Mike? Any of those float in your boat?
Not that early of a time frame, but it's not. I don't know if I would necessarily say that that's. It's not my cup of tea, but I wouldn't call it crazy. Just because of the fact that where the NDX has been and how quickly it's pulled back, there's nothing to say it can't snap back up that much rather quickly. So once again, not my cup of tea, but not as crazy as other things. It's not the craziest thing we've ever talked about on this network.
No, we talked about that wild silver upside not that long ago. That was pretty crazy. not as
there
wild,
you go.
Not as wild as this, or not as wild as that, I should say. This NASDAQ. I'm trying to look, listeners, while we're talking to see if it went up as a block that I can get a price for you. But it doesn't look like that is the case. I can't get you a price. But do you like those, listeners? 20,500 calls, 55 days to go. Somebody's playing in that realm for decent size out here in the NASDAQ. All right, Uncle Mike, we've already talked metals and a little bit of equities. We probably got time for one more bad boy on the old show. Which product category should we head to next, sir?
Well, as much as I'd like to talk about class 3 milk, due to your lactose intolerance, we can't do that. So, you know what? Let's jump on the boat with a 10-year note.
I had a feeling you were going to go there. All right, listeners, to the rates we go.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, you know where to go to find the rates. Pop out of the equities, go down 2 slots to interest rates, then in product family U.S. rates. Then we're going to scroll down a few to get to the 10-year, Uncle Mike's beloved 10-year, 110.26 right now, and that front future going away in about a day. That's off about a quarter of a percentage point, I should say, on the week since Monday, of course. Volume-wise, though, we're seeing some action out here. Nearly 6 million contracts on the tape already in the 10-year. So 10-year looking action-packed. Of that, a little over a third, 35.5% going up in the April contract that has about 15 days to go. What is April vol in the 10-year? Might be asking about 7.5. Up over half a point, about 0.6 of a point, which is getting pretty spicy for 10-year vol, all things considered. So kind of interesting stuff. Uncle Mike, sir, what's catching your eye in your beloved 10-year this week?
Well, I think that with where it's headed right now, in the rate world, the thing that I'm noticing is that the 30-year mortgage rates, they're in the 6s again. And you're able to get a mortgage in the 6s. And I think that's a big deal for the economy, in that just when you're below a certain number, it seems like we were at 7 for a while. Now we do have the rates in the 6 level. And so it almost makes me feel like, because of the pullback in the equities, we've had a rush to safety, if you will, by people going into bonds or into government treasuries, if you will, then that's something that could be a positive for the economy. So that's something that has definitely caught my eye in the bond world. The other thing that's catching my eye, for the last couple months, we are no longer in an inverted yield curve, or not to the extent with which we were. So in looking at the 3-month treasury, as of yesterday, the official yield close on it yesterday was 4.35, and the 10-year was 4.28. Now, that's 7 basis points, so it is still technically inverted, but it's not the craziness of being a full percentage point as it was in previous months. So things are starting to normalize a little bit in the rate world. And then in terms of the 10-year, the 20-year, and the 30-year, the 20-year is still above the 30-year. And but the 10-year is at 4.28, which is below both the 20-year and the 30-year. So it seems like we're starting to normalize a little bit. Now, just from a longer term standpoint, last fall, when the Fed continues to lower interest rates, it didn't do anything. It didn't make it so that bond prices would go up or yields would go down. Nothing happened. So what I'm watching right now, or what's catching my eye, like I said, number one, mortgage rates, but number two, rates starting to become kind of, sort of more normal. And I think that's a good thing for not only the fixed income market, but for stocks as well.
All right, listeners, let's see what's popping off. What can we find in this tsunami, this hurricane of 6 million contracts worth of paper, pretty close to it? Interestingly enough, there is one print that kind of stands out, listeners. We have to go all the way out to the May expiration, 50 days to go. That's where the big dog is this week, and it's a pretty large print. In fact, almost exactly 300,000 contracts, 299,287 to be precise, of the 113.5 calls going up in May. Pretty much exactly 50 days to go. By way of comparison, you could pretty much add up all of gold and throw silver on there, and this one call this week has exceeded both complexes combined. So pretty action-packed. And looks like Uncle Mike, the lion's share of this, over 250,000, went up on Wednesday. Paper just bailing on all these bad boys. So I had to go look and see if I could find exactly what they were up to. It looks like they were buying them back in massive blocks. They bought 85,000 back in one block. Here's another 30,000 or so. So yeah, they kept buying these, a total of over 250,000 of these trading on Wednesday, listeners. Again, 113.5s bought back. So obviously they were short the 113.5s in May, Uncle Mike, and deciding to buy those back in size this week. What are your thoughts, sir?
Well, there might be some bulls out there, or some people that are trying to take off their call hedges in case they're short the note, or whatever the case may be. But I would not be surprised if interest rates come down, meaning the price of the 10-year would go higher. So I can't say I'm surprised with that. I think that also the fact that Trump has said to him several times, at least I've heard him, or I've heard him say this, I'm a low rate kind of guy. And I can see him pressuring the Fed to lower rates through some type of a tweet war or whatever things that he does. So I'm not necessarily of the school of thought that the 10-year is going to just sit here. I think we could have some upside in the coming months.
All right, listeners, and there's always upside when you folks are involved. It's time to get to your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, listeners, welcome to the Futures Options Feedback. We have a lot of live questions of the week. You folks can get over there at Options. Make your voice heard. Right now, you folks still want to buy, 50% exactly want to buy those VIX 19 puts that traded for 55 cents earlier this morning. We talked about them on the option block earlier. 2/3 of you don't want a strategic crypto reserve, and about 54% of you think VIX is going to close at the end of March below the 20 handle, in which case you should be loading up on those puts. But Uncle Mike, I wanted to save this one till you could join us again. This came in a couple of weeks ago for you. So I like this handle. Al-K-holic. I see what you're doing there, Mr. Al-K. But he wants to know, is now a good time to revisit collars in precious metals like gold, silver, or even platinum? Uncle Mike, you're the guy I go to for all my precious metals collar needs. What do you have to say for our buddy, Mr. Alcoholic, who hopefully for his sake, his handle is a jokester?
I would hope so. I mean, I'll refer to my collar expert, Mr. Seymour Butts, and see what he has to say on it. But no, what's interesting and what I think really makes the collar attractive is when it's more longer term, at least in the silver world. So with that, in looking at such things, you still have the ability to sell premium at a further distance than you can buy premium. So in other words, you can buy your puts at a closer level to where the actual price of the underlying is, and then sell a call further out. So it makes for a favorable risk reward. With what you're telling me about what's happened to the gold call wing, that's concerning, but just at least looking at silver, looking roughly 1 year out, you can still do that depending on what strikes and what contracts you do and that type of thing. But for now, I still like it as a longer term collar. And I think that it's a good spot to be as an alternative to just putting your money in a savings account.
Yeah, we were obviously talking about the skew in metals earlier, and obviously the near-dated skew, not exactly very favorable for collars, but as Uncle Mike alluded to, you go out farther, and I pointed that out on the segment earlier as well. There is a bid to those calls and a discount to the puts, which is what you're looking for if you're trying to do some collars there, Mr. Alcoholic. So put down your drinks and go maybe put on some longer-term collars. Not quite as favorable as it has been, just skew-wise, but, you know, it's certainly better than the way it's shaping up in April right now. You don't want to do a near-dated collar, that's for sure. But you know what? Listeners, that music means we come to the end of an epic sojourn through the world of futures options. We talked metals. Uncle Mike got to defend himself against all the silver and gold critics out there. We talked equities. Is it truly a sum of all fears sell-off like the folks that Market Watch are implying? We even got in a little bit of the old 10-year note, talked about some collars, all sorts of fun on the show this week. Uncle Mike, I'm glad you could join us this week because your ears must have been burning the last few weeks. In the meantime, if folks want to reach out to you to discuss metals collars or the 10-year note or anything else, where should they go? What should they do?
Go to my website, stcharleswealth.com, if you're looking for a financial advisor who is not afraid of derivatives. Also, feel free to follow me on Twitter at Mike Tossaw, Tossaw. I try to put out a lot of content.
He is quite the content machine these days. Give him a follow on the old Twitters at Mike Tossaw, Tossaw. All one word, listener. That's going to do it for us on the network today. Back again tomorrow. No rest for the wicked. I'll be back with our good buddy Dr. Bix, back from Germania to talk all things vol. And then after that, one final time for the week, exclusively for all you pro cats and kittens hanging out in the secret club. If you're not, what are you doing? TheOptionsInsider.com/pro is the place to go to get past the velvet rope. Hang out with us on the cool Vol Views after party known as Options Oddities. It's a good time, if I do say so myself. I will be traveling next week, but I will be able to beam in for the OB with Uncle Mike. We'll see if we can pull off the trivia remotely. We'll have to see. And then, of course, back again throughout the rest of the week until I will beam in again next week for another great This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.